Hello again, everyone. This is Joe Henches with Beyond the Chart, and this is technical analysis of the stock market today. Today is Saturday, February 7th, and we're going to take a look at the market the way we usually do on the weekend, which means daily and weekly charts, indicators, the markets, key markets, and 3 ETFs. Stocks today in focus are NXP indicators, NXP semiconductors, QIHU 360, Goldman Sachs, and Tesla Motors. All right, we're going to start off here with the Dow on a daily basis. We really just have one more day since I do an update on Thursday. So the Dow was down 60 points, kind of up and then down and closing in the middle of the trading. So not a whole lot on a daily basis to be able to say a lot different. We'll talk about what I think is going on here in a minute. Same picture on the S&P 500. So, I mean, it looks like we're still kind of in the trading range. But I'm starting to think that we may be breaking out, and we'll see. The NASDAQ, again, pushing. We didn't close above, but the intraday high we did. You know, now here's the other thing I want to point out. We are getting the 10-day above the 21. We've got a little short-term moving average cross on all three of these. Okay, you notice how it crossed right here. Let me get rid of this for a moment. Crossed right there. Okay, so we now have 1, 2, 3, 4 days above the 10-day moving average, and we've got a moving average cross. So I'm starting to think that, and we got here. Let me blow this up for you. I'm starting to think that we might have a little move that's starting to kick out and get underway. The New York Composite. All right, here's something that it's been on my radar. I haven't talked about it, but I'm going to talk about it now. Okay. Same thing's happening. 1, 2, 3, 4 days above the 10, we got a cross. Now, here's what I think could be happening. We could have a very large head and shoulders consolidation pattern that's going on here. Okay. Now, here's the thing. If that's the case, this thing is getting ready to blow for I think, one final last hurrah. Here's the fourth wave. This will be 5 up here if that's the case. Now, this shoulder is messier than this shoulder, and that's why I was kind of hesitating. But there's just something about the symmetry of this that kind of just makes me think this could be happening. Okay, so that's something to keep our mind on our radar, keep on our radar screen in terms of a scenario here. I've also moved back to a more bullish count in here. I'm starting to think that this was a flat 3-wave A, B, C for a wave 4, and that we are working some kind of 5th wave to the high side. And if this plays out, that will definitely be the case. Now, we'll have to see. The market needs to take out either here or, actually here. I mean, that's a pretty broad range, but yeah, I mean, we have been trading in between there, so it's not really committing. It's not committing one way or the other. Same kind of things happening here. And now the Russell 2000 actually looks like it may have broken out with this close on Thursday. Okay, so again, and it has not been able to get past this trend line in the past. All right, let's take a look at on the weekly charts. Dow Jones Industrial. Now look at this bullish bar, okay? Big outside up day, up week, okay? Totally engulfing of the previous week and almost basically engulfing the previous 2 weeks, and actually a high-low. It's engulfing, let me blow this up. It's engulfing 3 weeks, 4 weeks, the last 4 weeks of trading. So this week had an intraday high and low that was greater than the last 4 weeks of trading, and we closed above, let's see, 17.33. Yeah, we closed above the close of the last 4 weeks also. And what is this one? 832. So we didn't quite. So this is a pretty bullish bar in here on the weekly reading. So that's the other thing that's playing into this. Same scenario. Look at this on the S&P 500. NASDAQ weekly. Outside up bar again. Now this looks a little more like it's in the, still in the consolidation mode. And then the last one is the Russell 2000, if I can find it. Well, actually, I want to do the New York Composite Weekly. Okay, and again, here's this head and shoulders. You know, it looks a little bit clearer. And look at this big bullish bar that we got. Now, the bears in the house, you know, aren't going to like this. And, you know, and I've had a tendency to lean towards the bear side because I just think this market is getting ready at some point here. And we've been thinking it's going to top out because of moves like this. But, you know, you can't, you know, the market's going to do what the market's going to do. And if the market's starting to act a little bullish in here, then we have to recognize that. And I'm just saying that this, I think, is a legitimate scenario we need to keep in mind. Let's see. The last one is the Russell 2000. Russell Weekly. Matter of fact, I even have, I got a nickname I got from my wife. They call me Blue Bear, and I actually have a blue cup with a bear on it. Now, that doesn't mean I'm always bearish. I mean, I've had some great trades to the upside too, but kind of interesting that I've got that little nickname. But anyway, all right, so here, Russell 2000, you know, we got a big bullish bar again. This is acting just like the Dow Industrials. All right, let's see. That's it for the indice look, and let's take a look at the indicators. Okay, here's the short-term trading index. Now here it's pulled back down. Now it's again, it's getting to the bullish side, but it's not below the extreme yet. Okay, it's not down here. We're back down to where it was on July 22nd. So there, you know, we'll see whether we can break out of this range or not. The VIX. Yeah, see if I can find this fairly quickly. There we go. VIX is really, again, you know, I drew these trend lines either Thursday or Tuesday, I can't remember which, and, you know, this is tending down. It started to push to the bottom of the trend line. It hasn't broken down below it, but short-term wise, it's definitely trending to the downside. And the high-low index, you know, again, this is the net new highs over new lows. So 125 more new highs, 52-week new highs than new lows for the day. And you can see this is a little bit of chopping sideways in here. So again, we're not up in the extreme. We're just kind of in the neutral zone to a certain degree. Neutral to positive is where we're at. Oh, the other thing, we go with New York Composite, and we'll take a look at on the New York Composite, is the McClellan Oscillator. And again, we're not up here in an extreme on the McClellan Oscillator yet. Okay, and you know, we may get there if we start to pop to the high side. Now we're still in this neutral zone on the McClellan Oscillator. And the last thing on the indicators, put to call, the 10-day equity put to call ratio is 0.68. It's changed over the last week from 0.67 last Saturday. So again, that is not in an extreme reading. It's got to get down into the 0.5, below 0.55 in my book, to start getting extreme readings and be there for several days, or get above, you know, point, you know, in the 8s. I have to look back. I don't have it in front of me, but, you know, it's in the neutral area is what I'm trying to say. All right, let's take a look at the dollar index. Okay, here's the dollar index, which had a big move, you know, popping back up on the high side here on Friday, kind of fluctuating. We look at this, if I flick to weekly, you can see we basically had a doji bar. So we're closed almost exactly where we opened for the week. So, you know, unchanged in here. And I don't know, sometimes you start to, this could be a pause. I mean, it could be, you know, kind of a sign that it's losing momentum to the high side. Now, if this is true, then it seems like with the dollar drop, if the dollar starts dropping, that would coincide possibly with oil rallying, I think. I don't know. We'll have to take a look here in a second. Let me pull up the next one. We'll take a look at is TLT. Okay, so here's the 20-year Treasury bond ETF, and you can see it's been dropped all week, and so that means interest rates are going higher. The next one we want to take a look at is the high yield. See if I can find that fairly quickly. Oh, it's right there waiting for me. Now, this is interesting, okay? This is risk on. Okay, when this is rallying, that means investors are willing to, their risk appetite is there. It's willing to take it, which means this usually goes up kind of in in sync with the stock market moving higher. Okay, and so now it broke out of this little consolidation area. It broke out of that here about 2 weeks ago. And we've got the moving averages crossing short-term wise. We actually have the 21-day moving above the 55-day. So the intermediate is now crossed to the high side. Okay. Now here's the other thing is you look at this trend line I drew in here. This is kind of a downtrend line from basically back here June through the low here in December. Here's the high in June. Now, if you ignore these intraday blips, I'm not sure what happened here. This could be data problems, but either way, you look at this trend line, it looks like it's breaking to the high side. That's another reason why I'm looking at this going, okay, what's going on? All right, now let's take a look at oil, if I can find it quickly. There we go, US 12-month oil ETF. So again, I talked about, I drew this dotted line here a few sessions ago. If we break above this dotted line, I think we're going here. Okay, I think we're going to 32 in a part of a snapback rally, and that wouldn't be unusual, I think, given the kind of move we've had to the downside. These things can really, when they snap back, they can really move. All right, and then the gold, if I can find it. Here we go. Here's the gold. Okay, so now we had the big drop on Friday. I think it was down like $28 an ounce or something like that, or maybe even more. So I got stopped out of the second half of the position, but still with some profit on the second half of my options. But disappointing that I wasn't a little more aggressive of getting out here when I was outside the Keltner channel. And, a little bit of greed taking over, thinking I was going to ride this move all the way up here, and you never know. So now what is this? The wave count, this is throwing this wave count into doubt to me. Now, if you assume the intraday should not overlap, and some people will say, yeah, you just count the closing prices. So I don't know. Right now, we'll have to just watch to see how this plays out. The one thing, you still get this head and shoulders, okay, bottom. So what you could have is a pullback to the neckline that's going on here, and then it resumes to the high side. I mean, we still have the intermediate moved upwards. Yes, the short-term trend has got back right to the 21. The 10 is right to the 21. And we'll see whether or not this is the extent of the move and it consolidates and bounces back up or not. But that's the picture on gold at the moment. Okay, before I move on to the three ETFs I want to take a look at, I want to go back to the Dow because there's one thing I forgot to mention. Here's something, actually, is it the Dow or the S&P? I think it's the S&P that has more of this picture. And let me blow it up. Okay, so here's what could be also going on, all right? If I drew some, what I would call fan lines in here from this top across the peak, the rally peaks, that we could be getting, this kind of scenario playing out. And this could imply, a couple of days of consolidation, maybe a little pullback, and you break through this fan line here, and then it's going to go. So we'll see whether or not, we get a couple of days of consolidation or a pullback. But this is something I just kind of picked up when I was looking at this earlier this morning. So, all right, now I'm going to take a look at the semiconductors, the home builders, and the financial ETF. Okay, here's the semiconductors, basically still chopping sideways. Nice rally this week, though, coming back up in here. Now, the moving averages are still kind of below on the short term anyway, and the intermediate is still, they've kind of crossed, but this really looks like sideways action to me. So we'll have to continue to watch for this to break out. I mean, you'd have to, if you look at this on a trend line basis in here, I mean, you just draw something. I mean, that's a possibility. And again, it's this kind of consolidation that's been going on in the market. Home builders, the home builders have been pushing back. I mean, look at this rally here, okay? Of course, long-term interest rates have been dropping and dropping, and but if the economy is going in the tank, home builders should be rolling over, and the home builders aren't. They're actually pushing to new highs. So there's another positive for the economy, which I don't know. You continue to get a lot of mixed signals on this economy. The financial ETF is the last one to take a look at here. And this has bounced back pretty dramatically too. And we get several closes above the 10. We could be crossing, coming back up. We got some divergence here. See how the indicator did not go to a lower low when the price did. So we got some divergence in here, and especially on the demand index. Look at that. That's a beautiful picture. And now it's crossed into the positive territory. So it looks like it's getting ready to go. Now, I was looking back at this, and I remember seeing this little scenario. Where was it? If I can't find it. Oh, okay. Here it is. Look at this choppiness sideways like this before it broke out. This is how the market's looking today, and how it's looked since the first of the year, basically. So it's kind of interesting. Just happened to see that pattern. I'm a pattern kind of guy. I'm always looking to see. Remember this choppiness, but that happens periodically. All right, now we're going to take a look at NXP semiconductors. All right, this has been consolidating for quite a while. Early January, basically chopping sideways up and down. And now it looks to me like with this big move on Friday that it's broken out. And it'll be interesting to see what kind of run we get out of it. But it looks like it is definitely breaking out to the high side. The next one is QIHU 360. QIHU had a nice day to the upside on Friday also. And I think there's a real possibility that QIHU is breaking out of a symmetrical triangle down here. Okay, short term, it's got some work to do. I mean, the trend's been down. It's been so negative on QIHU, but it could be getting ready to go. I know that when you flip this over to weekly, now you're going to see a bunch of lines on here because this is I haven't really converted it. A lot of times I clean it up when I go to weekly, but let me look at the indicators real quick, and you can see that again there's divergence showing up on the weekly, on the move. Same here, and especially on the directional, you can see that this did not go to a lower low with this move the last few weeks down in here. So QIHU 360 could be getting ready to nice weekly bullish encompassing bar also, okay, on that from a weekly basis. Look at that bar. So it's pretty nice. We'll see. I think that's a very real possibility that it's breaking out and getting ready to make a run. And Goldman Sachs, of course, why am I doing that? Let me go back. Goldman Sachs is going to kind of mirror because it's part of the financial ETF, I believe. So it's going to look almost like the financial ETF. Now, I really thought in this sell-off that it was going to come back down and test these previous low points and support points. It almost got there. Now, here's the other thing to look at. We're getting divergence on the RSI. That's why we got this bounce, okay? And especially on the demand index. The demand index has gone positive. So, we could get a run to the top of the Keltner channel up here. 190 or so would be if I had to target something in terms of where I think it's going to go. Now it's been up, 3 out of 4 days. Actually, no, 4 out of 5 days. 1, 2, 3, 4 out of 5 days. So it's had a big move, a pretty good move as it is already, but it looks like it's in rally mode. And then the last one I want to take a look at is Tesla. If I can find it, Tesla Motors. I think their earnings are coming out this week. So I'm starting to think that correction may be over on Tesla. I thought it was going to pull back down for C. Let me get rid of the crosshairs. I thought this was going to pull back down for an A, B, C. Let me blow out here. Okay. Here's the top of the original move, 5-wave move. Let me take you all the way back. Okay. Here's all the trading on Tesla. And I think we had a first big 5-wave move up here that peaked here. Now we've been correcting sideways since when was this peak? February 2014, February last year. So for the last year, Tesla's been correcting sideways. Yes, it pushed to a new high, but that was a 3-wave, I think, B-wave move, which is why we got this pullback. I thought it'd pull back to the bottom here of A, it didn't quite get to 180. It got to a low of 185. And I do think, we blow it back up again. I do think that now, and there's divergence that showed up in this move, okay? And now it looks like we've had 5 waves up, which could be a first wave, you know, up in the new direction for a new part of a wave 3. Okay, so you'd have a 1, 2, 3, 4, 5. Okay, again, starting out. Now, if this is 5 waves here, I'd actually like to see it get above this point as a part of that 5 waves. I'd like to see it exceed this. So we'll have to watch and see what it does. The other thing I'm going to put out here as a thing to watch for is this trend line. If you break, because this trend line would kind of be a trend line that's including all of the corrective action. Okay, so you break this trend line, I think we're going to be going. You know, a good chance that we could be off to the races here. So I guess my scenario on Tesla is that I think the corrective move may be over. We may be underway in a new leg up. That doesn't mean that we go straight up to the moon, but I think we could be on the start of a new 5-wave move to the high side on Tesla. We'll see how she goes. All right, that's it for today. I'll be back tomorrow with trade ideas. I'll take a look at some of the stocks, see how we'll review what we were in and got out of, and then we'll look at to see if there's anything new for the coming week. It's been Joe for Beyond the Chart. If you're watching the video anywhere else but the website, head on over there, check it out, the posts, other good stuff. As I mentioned last time, I just kind of updated the archive page for the archive posts. If you're not a subscriber, just click on the little red box on the screen here and subscribe. Remember, stay focused, follow your plan, and trade without fear. Have a great weekend, everyone.